Welcome to This Explainer. Today, we're unpacking a comprehensive framework for what is arguably one of the most absolutely crucial processes in any business, the operational audit. We're going to move way beyond your standard financial statements here, and instead, we're diving into the true engine of an organization, its efficiency, effectiveness, and economy.
All right, take a look at this mind map. This is the visual roadmap we're going to be using to navigate the topic today. It's honestly a brilliant framework. It connects foundational definitions, right up there at the top left, all the way down to a mathematical success formula at the bottom. So let's explore how all these interconnected pieces actually add real, tangible value to a company. Here is our game plan for today. We'll be hitting 6 key areas: definition and scope, audit areas and process, key risks and controls, a real-world order-to-cash example, benefits and red flags, and finally, we'll wrap up with the takeaway and success formula. All right, Section 1, definition, objectives, and scope. Let's get into the what and the why. So, what exactly is it? At its core, an operational audit is an independent and objective evaluation of an organization's efficiency, effectiveness, and economy. Now, that word independent is key. It means we aren't biased by the department we're looking at. Think of it like this. Imagine an outside consultant reviewing a factory floor. They aren't just checking off a box to see if materials were bought. No, they're verifying if they were sourced economically, if they were used efficiently, and if the final product effectively meets quality standards. So, what's the end goal here? What are we really trying to achieve? Well, beyond just evaluating those 3 E's, efficiency, effectiveness, and economy, our objective is to play detective. We're actively looking for risks and control weaknesses so we can ensure the absolute optimal use of resources. It's all about improving processes and ensuring compliance to ultimately add value. For instance, if you find out a machine is just sitting idle because of poor scheduling and you fix it, you've just boosted production without spending an extra dime. That's a real game changer. Now, our scope sets our boundaries. It tells us where to look. We review policies, we evaluate systems, and we assess the whole organizational structure to make sure the right people are in the right jobs. And a massive part of this is benchmarking resource utilization across what we call the 4 M's: manpower, machine, material, and money. Think about it. If you only look at the money, you might completely miss the fact that your manpower is overworked or your machines are totally outdated. Moving on to Section 2, audit areas and process. This is the where and the how. You see, operations affect literally every corner of a business. We might audit the physical side of things, like checking capacity utilization and production, or reviewing vendor costs in procurement and inventory management. But we might also look at the human and digital side, reviewing recruitment practices in HR, checking access controls in IT, or evaluating order processing in sales and marketing. Basically, every single department, including finance and accounts, is a prime target for continuous improvement. Now for the how. The operational audit process itself relies on a strict 5-step methodology. It kicks off with planning, where you deeply understand the business. That naturally leads right into risk assessment, which helps us prioritize our vulnerabilities. Once we know the risks, we jump into testing and evaluation. That's where we collect the hard evidence. After that, we communicate our findings through comprehensive reporting. And finally, number 5, and this is absolutely crucial, follow-up. Because honestly, without monitoring the actions taken, the audit report is basically just a very expensive piece of paper. Section 3, key risks and controls. Let's look at the pitfalls and the safeguards. Listen, every single operation faces inherent risks. Some of them are just those everyday drains on the business, things like inefficient processes, high operating costs, and poor resource utilization. But others are severe threats. We're talking errors in rework, non-compliance with policies, weak performance monitoring, or major technology and system failures. And of course, inadequate internal controls. For example, if you have a single employee who can both authorize purchases and issue payments, there's no way around it. That is a glowing red risk for fraud, waste, and abuse. So how do we combat those exact risks? We implement vital, non-negotiable controls. To fight everyday chaos, we need well-documented policies and procedures. To fight that fraud risk we literally just talked about, we enforce a strict segregation of duties and a clear authorization and approval matrix. We rely on regular monitoring and reporting, performance indicators and KPIs. We do reconciliations. We set up physical and logical access controls so unauthorized people can't just walk into a server room or manipulate financial software. We also need constant training and awareness, topped off with internal audit and management reviews. Section 4, order to cash example. Let's put this theory into practice. Let's look at a real-world scenario, the order-to-cash process. This is the absolute lifeline of revenue for a company. The journey begins the exact moment a sales order is received. But before anything physical moves, we have order validation, checking credit and stock. Then comes the goods dispatch as the product is actually shipped, immediately followed by invoice generation. Finally, the payment receipt comes in, and we do a thorough reconciliation to completely close the loop. Now, within this specific life cycle, our audit focuses intensely on a few key pressure points. We're relentlessly checking for timely order processing and completely accurate pricing and billing. We heavily scrutinize credit control effectiveness because, selling to a customer who won't actually pay is infinitely worse than not selling at all. We check stock availability and accuracy, ensure timely dispatch and delivery, and verify timely receipt and reconciliation. These are the specific safeguards that keep a business alive. All right, Section 5, benefits and red flags, time for the payoffs and the warnings. Putting a company under this kind of microscope yields some really incredible payoffs. It massively improves operational efficiency. By systematically reducing costs and wastage, you naturally enhance productivity and overall quality. This whole process strengthens internal controls, it improves compliance, and it creates this amazing ripple effect that ultimately increases customer satisfaction. Plus, it supports much better decision-making from the top down, which undeniably adds immense value to the entire organization. Conversely, you always have to be watching for the symptoms of operational disease. These are our common red flags. You might see human indicators like high overtime and absenteeism, or low employee morale and high turnover. Or maybe you'll see process failures like severe delays in processes and approvals, repetitive errors in rework, manual processes with high errors, a total lack of documentation, and frequent customer complaints. Even things like excess inventory, sudden stockouts, or unexplained cost variances are huge red flags pointing to potential waste or, even worse, hidden abuse. Finally, Section 6, Takeaway and Success Formula, the core philosophy. If you take away just one thing from this explainer today, it really should be this key takeaway. Operational auditing helps in identifying gaps, improving processes, and optimizing resources. It isn't just about playing corporate police. It's actually a continuous improvement tool that drives efficiency, effectiveness, and economy, ultimately contributing directly to organizational goals and sustainable long-term growth. And it all distills down to a simple yet profound mathematical equation, the operational audit success formula. It goes like this: the right process, plus the right people, plus the right controls, plus continuous monitoring equals operational excellence. It's that straightforward. If you can align those 4 pillars, excellence isn't just some vague hope, it's a guaranteed outcome. Remember, we don't just find problems, we help improve performance. As an auditor or a manager, you are a value-adding partner. So I want to leave you with this provocative thought to ponder. Look at your own organization right now. Do you truly have the right people, processes, and controls in place today? Or are you just sitting back waiting for those red flags to start popping up? Thanks for watching this explainer, and we'll catch you in the next one.